Welcome to the Wealth is in the Details podcast. In this podcast, financial planner Peter Raskin helps families and business owners understand and prepare for their wealth journey. Along the way, thoughtful and detailed planning can provide clarity and confidence as clients confront a multitude of financial decisions. Listen in as Peter shares stories and insight into people's wealth journeys. Now, let's get into today's podcast.
Hello and welcome to Wealth is in the Details with Peter Raskin from Raskin Planning Group. Peter, how are you?
I'm great, Eric. How about yourself?
I'm excited. I kind of geek out on some of the things that you talk about. It's a lot of fun, and today you've got a guest on the show, and this is something I don't know if you've really ever covered on the podcast before, but today's guest is commercial real estate investor Michael Price, principal at Legacy Real Estate Ventures, LLC. And from what I understand, Peter, you've known him for a very long time.
I have, and I've known his mother even longer than I've known Michael. So my elementary school music teacher was Mrs. Price.
Really?
Yeah, just a coincidence. And when I went to college, I think even before college, we realized that Michael and I were going to go to the same college. So we met there. We actually played football together for a bunch of years, and it was just a great thrill to see Mrs. Price at Parents' Day.
Oh yeah,
and certainly get to know Michael as a friend. It's just been, I got very, very lucky in many ways.
Oh, that's fantastic. Well, I am super excited about today's topic, real estate investing, and I'm here to learn just like the audience is.
Yeah, I'm excited as well. And just a little background in talking about, when I talk about real estate, as everyone knows, real estate in general is just a huge part of the economy, not just in the US, but around the globe. And from my perspective, it's really an important part of a family's financial plan. I think of real estate as one of those asset classes that we can invest in. And just the background, asset classes are groupings of investments that have similar characteristics. They kind of do similar things for investors. And so examples of that would be cash and cash equivalents, which are savings accounts and checking accounts and money market funds, things that are really liquid. And then you got bonds, fixed income. That's an asset class. And there's lots of different kinds of bonds, but they've got certain things in common, which is they pay interest, and then they pay the principal back when the bond matures. And then there are real assets, tangible things like buildings or barrels of oil. And the most common real assets are property, office buildings and apartments and industrial complexes. And another real asset are commodities like raw materials, oil and wheat and gold and oranges, things like that. And so those are some of the asset classes. And then we certainly have stocks, an important asset class. But real estate is just a vital part of that whole picture of asset classes that one can invest in. And we've done podcasts about those other more accessible and liquid asset classes like cash, bonds, and stocks, but we really haven't done a deep dive into real estate as an investment. And I thought today Michael could address that because that's his business, that's his expertise. And we won't discuss it as a personal asset like your home or vacation home, although that's also an important investment. So we'll just be talking about it as a real investment, like you would think about other kinds of options for you. So Michael, just a welcome to our podcast, Wealth is in the Details. And I just remember in college you talked about real estate, and then as a young person after college you started buying real estate, and I just remember I was so impressed and amazed that you had this chutzpah and this vision to do that, to start buying in an economy. And back then when we graduated college, economy was really tough. So I thought it would be really good if you told us about your journey and the paths you've taken and what you're doing.
Peter, thanks so much for hosting. And I'm really honored to be able to speak to you today. Our lives have certainly been intertwined since the late 1970s, and it's been just a great and important relationship. So my real estate career actually began while we were in college, and I was working in the Back Bay renovating apartments for one of my high school friends' fathers. And he urged me to go out and get my license and get interested in the business. And so it all started scraping wallpaper and painting and hauling bricks and debris from a Back Bay brownstone. When I got out of school and was going through the interview process, the standard lender interviews and financial oriented or retail oriented opportunities just weren't of interest to me. So I did a lot of exploration on the real estate side, and I started my career in property management. I was advised that that's a great place to start and build from the ground up. And I was taking care of buildings, collecting rents, hiring contractors for about a 5-year period with a company called the Codman Company. And then I went on and worked with a company called National Development. And National Development was building up a development company and needed property management expertise. And I wanted to learn the development side. So I was with that group for about 10 years and built up a group with them, a property management services company, and also learned the development business. But I had a fire in my belly. I really wanted to do my own thing and work with my own company. And I started a company called Eastport Real Estate Services. And Eastport was started out again as a property management fee business. And within a year or so, we built up enough ongoing recurring revenue to cover our costs and then go out and start to buy properties. And that partnership is still in place. It's a 27-year-old company, but about in 2008, I decided that I really wanted to get away from the day-to-day management. I didn't want to run that company, and I wanted to just focus on investments. And at that point in 2008, right before the markets crashed, I ventured out once again on my own to begin a new journey with Legacy Real Estate Ventures. And we are out buying typically office buildings, some medical buildings, flex and warehouse, and some retail buildings as well. And so we're out in the market. We've done about 25 acquisitions since 2008, and it's been a great ride.
You know, I just love the entrepreneurial spirit and vision that you had from the get-go. And again, I just admire that chutzpah, because it not everyone has it. Not only the fortitude, but the courage, and again, that just vision to see things that others are not seeing. So for example, I was not thinking that way at all when I was in college. I had other things on my mind. I just think it's awesome that you did it.
Well, thank you. Thank you. When I started to work for the Codman Company, I immediately was digging in and looking at condos and 3 families, and started to do a little buying on my own. And it was really, it just all clicked for me. It's been a terrific career choice and career path.
Yeah, good. Congratulations. I'm excited for you, and it's been great to witness it. So just tell us why real estate is your investment of choice.
Peter, you used the word tangible before, and I think that is the best description of why I like real estate. You can hold it, touch it, feel it, work on it. You can live in it. It's there. If there's a financial crash and your stock certificates devalue, you can also have problems in real estate. You can have vacancies, but at the end of the day, if there's a problem, you still have the property. You could take a step back and figure out a new creative approach with it. It offers so much ability to be creative and do things differently, and just long-term financial securities.
Yeah, that it does, and it doesn't tend to be quite as volatile as at least the perception is. It's not quite as volatile as stocks, for example. Now you're still owning something, but stocks can change values very, very quickly, and real estate does change value both up and down, but seems to be a lot slower from that perspective.
Well, there are benefits on many sides. First of all, if you manage it and rent it out and things are going well, you experience cash flow. And so you've got some income generated from real estate. You're also paying down your mortgage. You're amortizing your mortgage. So you're building up wealth there in terms of paying off your loan. And if things go well, the property will appreciate. So that's three ways that you can increase your value.
Yeah, and also the federal government and state governments offer certain tax benefits for real estate investors.
Right. There's depreciation benefits as well as other tax incentives. Historic properties come with tax incentives. There are opportunity zones where you can buy properties and have some great government incentives.
Yeah. Another great feature about real estate, I think, is the ability to add value to the property. Just with your own, if you're the owner, adding value by offering certain features to those that are your tenants.
There's many ways you can do that. And I've done a little bit of actual development from the ground up where you go through a permit process and build out a building and rent it out. And that's ultimately the greatest level of value add. But it's very, very difficult. There's a lot of hurdles and challenges. What we like to do is buy existing buildings, existing product, take a very conservative approach, and we buy buildings that have income stream in place, and then we enhance the value. And my background, as I mentioned, is property management. So what I like to do is take a step back, take a look at the building and what it needs and how you make it more contemporary, how you service the tenants and create, again, what I call incremental value through property management. It's not as risky. We renovate lobbies. We don't tear them down and rebuild them. We renovate tenant spaces, do things with landscaping, but not a lot of structural, not a lot of expansion. We work within the existing framework. Again, a more conservative approach, but a great way to add value to the property.
It seems like it's the get rich slow approach, in the sense that you're able to, by adding value, I would think you can increase rents. I would think at some point when you decide to sell the property, you'll sell it for more because the rents are higher.
Right. Ultimately, the value proposition and the increase in value comes from raising your rents and then working off of a cap rate or return investment. And that's how you really make money in this long term.
Uh-huh. Could you talk a little bit about kind of one of the skills that I would think you've developed over the years is the knowledge of the markets and knowing value and knowing when real estate values are of good value. I think about real estate like other markets being cyclical. Could you talk a little bit about that?
Well, they certainly are cyclical, Peter. And right now we're in a little bit of a challenging market. But what I do is I'll take a look at a building that I'm interested in or that a broker might offer. And the first thing I do will be to look at the numbers and try to understand what the income and expenses are and what the ending or resultant net operating income is, and figure out what my sense for value is based on those numbers. Then I take a look at what we will do differently. How can we save money at the property? What are the rents? Are they below market? Are they above market? If they can be increased, then you're going to hopefully add value. If the rents are too high and they're above market, then when the leases renew, you're going to lose value in that acquisition. But we look at the numbers really closely. We look at comparable leases. What are other people out in the market paying? We look at recent sales in the market. What are other people buying? Does your competition own their buildings for? And can you compete based on their basis? And if we like that part of it, then we'll go out and actually look at the building, walk through it, get to understand it a little better, understand any limitations. So those are the things we do look at first.
Yeah, I think the advantage that you've developed over the years, I would think is that knowledge, that ability to see value when it's there, and if it's not there, you're going to walk away. And as a professional investor, I imagine you've got a great leg up on those buyers or sellers that may not have the experience, may not have the deep expertise. You're a professional, and I think when you're a professional in your business, there's an advantage. You got a leg up.
Well, I could tell pretty quickly what a property should be worth and where the market is. One of the things I do in addition to running this company is I actually teach at Boston University in the Metropolitan College in a real estate certificate program. And the course I teach is called Market Analysis, which is in essence, how do you make these decisions? How do you choose where you're going to buy and what you're going to build or develop? And it's really a good fit for me in terms of teaching a course, because it really is all of what I base my acquisition strategy on.
So that's a great lead into my next question is, and we may not have time to go through all the details, but just in general, what are some of the big decision points for you, when you decide to buy or sell a property? We talked a little bit about rents, ability to add value, but what are some of the other things you're looking at, and how do you go about that?
Well, that's a great question, Peter, and it's really the foundation of being successful is to first and foremost figure out where you want to do your business and what kind of markets you want to be in. How does it fit into your portfolio? How does it fit into your ability to service a building? And do you have a track record in that market? The numbers are really important, and we want to make sure those first and foremost work. And then we go in and look at the building very carefully. We look at capital needs. I have based on my experience in the property management world, I call it a sickness, but I go through these buildings and I notice things. I notice stains in the ceiling, and I notice foundations that are cracking, and boilers and equipment that looks like it might be worn. We look really closely at capital needs, at mechanical equipment replacements and remaining life, and determine what types of additional monies or hidden monies might be required. So that all goes into the formula. And then we go and we talk to our lenders, and we find out if they're interested in the deal, if they like the way the deal's structured. And we also have a group of investors who get involved in the process. And we ultimately want to make sure that there's enough of a return to interest the investors, and that there's some good solid long-term appreciation, and that it's a project that we would be proud to own and fits into what we do. And you go through all of this process and you do your evaluations, but also that feeling really comes into play. And you have to be emotionally attached to these things because they take so much energy and effort to close, but you don't want to be overly emotional about it. You really need to be able to back off if the property is not the right property. But at the end of the day, when I say gut is also experience, it's expertise, and it's track record.
Hi, this is Catherine Broy from the Raskin Planning Group. Apologies for the interruption. Thanks so much for listening to Wealth is in the Details. We hope you're enjoying it so far. If you have any questions or would like to talk more about this topic, please visit our website at www.raskinplanning.com. Look for the podcast's show notes and connect with us via social media.
Get a great lead into my next question is, have you made any mistakes? And would you be willing to give an example of a purchase or a sale that didn't go as well as planned?
Sure. Unfortunately, there are a few bad memories, and we've actually bought probably $200 million of real estate value. I'm going to say 45 or 50 projects. And so you're bound to have a few tough ones. And one in particular that comes to mind And we just simply bought it for the wrong reason. It was a smaller building, and it was a bank building, a former bank building, and it had all kinds of capital needs. It was very, very cool looking structure, very old brick. It had a bank vault in it that we were going to get creative and do something with it. But it just never, there were a couple of reasons why it failed. One, we bought it for the wrong reason. We bought it because we had some staffing availability, and I wanted to give that particular individual a project to work on. And that's not a reason to buy a good investment. So we also overlooked some of the capital needs of the building, and the market simply wasn't strong. There wasn't enough what I call velocity in the market, enough leasing activity, and you actually like competition and build off your other competitors, and that wasn't there as well. So that property, unfortunately, we did sell it, but we gave up most of our equity in the sale. We were happy to get out of that. I'm going to call it a leaking ship. One other deal that we did in a marketplace where there simply wasn't a lot of office product, and we thought we would be the pioneers and bring office to that area. Well, the building was full, and what happened was when the economy turned in 2007, that building was the first one to empty out. We simply couldn't recover and ended up selling that one at a loss as well.
Yeah, we learn by our mistakes, and you wouldn't be an entrepreneur or business owner if you didn't make mistakes once in a while. You have good intentions, like everyone, but these things happen. But I just am curious, because you've been doing this a long time. You must be careful with your leverage, borrowing, because if you were borrowing so much, then that could cause additional difficulties, I assume. Is that fair?
Well, it's interesting because in this second scenario I gave you, the lenders were really understanding, and they recognized the problems, and they worked with us. They suspended amortization of the loan, so the loan became interest only for a time period. They did get paid in full, but on the lending side, we're very careful not to over leverage, and we do have an equity piece that comes in. But the banks also have been regulating that, and they've been very careful about being clear that if you're at a 65% loan to value, that's about where their comfort level is. Anything over higher loan, there'll be personal guarantees involved. So we are governed somewhat by what's happening in the lending world.
Yeah, well, you must be have good relationships with your lenders, because they must trust you. You're looking out for their best interest as well. You've had all this experience, and you've been good at what you do. So I'm sure that's helped you from a leverage perspective.
The lenders are part of the team, Peter, and we really rely on them. The lenders we end up with are ones who, when they make a proposal, they typically stick with it, and they support us. And we like to communicate with them from the start and keep them involved. And we're really fortunate to have found some great partners on the lending side.
Oh, good. So just could you talk a little bit about how the real estate market is different? I've asked the question, is all real estate the same? And do you focus your attention on certain kinds of real estate more than others? I mean, you're not going to buy any kind of real estate, I assume.
Well, Peter, the real estate market on the commercial side, it's like a buffet. There's a lot of different choices, a lot of sectors you can choose to get involved in. You can be in the multifamily or residential side, which is always strong because people need a place to live. You can be on the retail side, and I've always been intrigued by that because the retail real estate is a lot based on people's buying interests more so than the real estate itself. Who are your retailers, and who's going to be strong, and what are the trends? You can be involved in the industrial side, which is a very hot sector right now and seems to be withstanding this economic downturn. We chose the multi-tenant office sector or area of business. And basically we chose Class B buildings, a smaller footprint of building, a small cap range of building in the anywhere from $3 to $15 million in range. We like the fact that we have multi-tenant buildings because if some tenants leave, others grow into the spaces. Your risks are hedged. And then we expanded that into the medical side, and we started to buy medical office building. Once you do a lease with a doctor, they typically stay long-term. They have pretty significant construction and startup costs, so they're not going to leave the space on a short-term basis. And so we then went into the flex area and warehouse area and started to buy some of those projects as well. We have a few retail deals, but there's really a great variety of ways you can get involved in the real estate business.
Do you see in today's real estate market, do you see any types of real estate to avoid where we are right now? Could you talk about those risks and challenges and opportunities?
Sure. Right now, the real estate market is somewhat frozen. It's very difficult to find projects to purchase that will meet our investors' cash flow requirements because interest rates are so high. And until people start dropping their prices on sale side, we're not going to be doing much buying. The lenders are also being very, very careful. And a lot of that is due to the fact that on the office side, which we're mainly focused on, we all know about the work from home tendency, and we would love to see people coming back to work. And we love the fact that the hybrid model is being encouraged now. So that's tough news, really, because people are consolidating on their office spaces. The place I would say not to be is downtown Boston, large office footprints, Class A and B buildings, because until big business encourages employees to come back, the office space is being underutilized. Vacancy rates in Boston, especially on the Class B side, are very high right now.
I just think about my office in downtown Boston, my office building, and I'm guessing it's on any given day there's no more than 30% of its occupancy here. It just seems empty.
Well, that's true, and that's a big problem, especially when owners' interest rates, loans may be due, variable rate mortgages may push their costs up. When they're renegotiating with tenants are taking less space or altogether vacating. So where the crisis is coming, and which means opportunity, is I believe the Class B marketplace in downtown Boston. And I've already heard about what I'll call real horror shows of buildings being valued at selling for $150 and even less than $100 a foot. I expect to see a lot of that. So what do you do with a building like that? What do you do with that opportunity? Well, a lot of people talking about converting to residential or converting to lab. I happen to think there's many, many challenges, especially economically associated with the conversions. So it's not going to be as easy as people talk about, but I think that's where there'll be opportunity and there'll be plenty of availability and a lot of bloodshed in that sector of the marketplace. And
do you see your firm venturing into downtown Boston, or do you think you'll stay out in the suburbs and those kind of properties?
We've done a couple of deals in Boston and done very well with them. We're not involved in Boston right now. Our product in the suburbs has been doing really well, thankfully, because of the smaller footprint, smaller tenant requirements, and that sector has been very strong. So my tendency would be to stick with what's worked and continue to be conservative. That being said, if I can find an opportunity, maybe a one or two gem type buildings in downtown Boston, I would explore those possibilities.
Michael, I assume you're investing your own capital in your properties, and it sounds like you've got other investors that join you. How does that actually work? Why are investors coming to you? How do they enter your your investment? Are these the same people time and time again? So give a little description of really your business and how you raise capital.
So, Peter, we have set up separate single-purpose LLCs to purchase each of our pieces of real estate. And going back to our first acquisition, where we raised $320,000, I'm going to say $20,000 or $25,000 at a time, basically through family and friends. And what it's evolved to is a group of 40 to 50 investors who are very satisfied with our track record and confident in our expertise. And typically we'll set up an LLC in which 50% of the ownership of the property or the LLC belongs to the investors. The investors are provided typically an 8% preferred return and then 50% of the cash flow above that. So that's our hurdle rate, that 8%. If a property is too much less than that, our investors are going to just put their money in CDs at 5.5% and stay safe and stay liquid. So we're trying to find deals at that level. The investors get the preferred return, then they get 50% of the cash flow. We get the other 50%. That's our incentive. And then on a sale or refinance, 50% of the proceeds go to the investors as well. And we've got a loyal group of people who've been with us a long time. The investor equity piece is not something we're seeking more of because we've got these loyal followers. Our challenge today is finding the investments, finding great real estate for us to buy.
Yeah. You're a very patient and prudent investor, and therefore you just got to keep on shopping for the right properties.
Exactly. Some years we might buy 2 or 3 pieces of real estate, and some years we won't make a purchase.
Sure. I just want to make it clear to our listeners that neither Legacy Real Estate Ventures or Michael, we have no business relationship with the Raskin Planning Group or Lincoln Financial Advisors, my broker dealer, and just to make it clear, I can't recommend that clients or listeners invest in a property that Michael invests in, and I'm hoping that this podcast is really just educational to give people a sense of what a real estate investor does, how they raise capital, what the risks are, what the opportunities are, and it's really educational. So I just want to make that clear statement because I think it's important to do. Michael, your goal is to build long-term value that can be passed down to future generations. I saw that on your website, which is I think a wonderful line. And now your daughter Jen Price has joined your business, so your vision is coming true, and I'm sure that's very exciting for your family. In an ideal world, how do you see this transition playing out over the next bunch of years?
Well, Peter, Jen joined me about 3.5 years ago with 10 years of experience in the business, and she is just wonderful to have around. I love her enthusiasm and energy, and she's got tremendous contacts in the business and has been digging up real estate possibilities for us and is learning the business and learning the acquisition side. And my goal is to transition out over the next 2 to 3 years and play an advisory role and let her continue to buy and manage the portfolio.
That must be a thrill for your family, just to pass on that business and be able to observe it as well.
It's terrific to have Jen with me. We do get into debates over technology. Other family members don't appreciate the real estate conversation at the Thanksgiving table, but those are minor challenges. But it's a great plan overall, and it's really a wonderful feeling to be able to see your daughter take things on and follow in your footsteps.
Kudos to you and your daughter for being able to work together like that, because it doesn't happen. It's not always easy. Families is not always easy, but I'm excited for you, and I'm crossing my fingers that it's going to work out great. So
thanks, Peter. I have a lot of pride in what she's accomplished so far.
yeah, as you should. Michael, this has just been a wonderful conversation about real estate, and I'm so thankful that you're giving us the time, that you're sharing with us your experiences, and I think it was really helpful and interesting. Thank you so much for doing this.
Peter, it's my pleasure. I do want to leave you with some closing comments, which I typically present to my class, and really it's 8 thoughts on what it takes to succeed. And I think that all of these components are very important, and I would attribute a lot of my success to following these guidelines. And the first is to know your market, then to build long-term relationships, integrity, do what you say you're going to do, expect challenges, hard decisions, and changes to your plans, make your luck. Luck doesn't just happen. Luck is when preparation meets opportunity. Don't take anything for granted. Follow your passion. And finally, having a sense of balance in your life is very important.
I love it. Those words of wisdom are good for anyone, business owners, real estate investors, other entrepreneurs. It's just those are great words of wisdom. So thank you for sharing that.
Well, thank you, Peter. I really enjoyed speaking with you today.
Oh, it was great.
Gentlemen, this has been fantastic. Michael, this is a lot of great information, but I know that you only scratched the surface on what you could have spoken about today. If the listeners want to reach out to you, what's the best way to get a hold of you if they want to further this conversation?
Happy to continue the conversation via email, mprice@legacyrev.com.
All right. I appreciate that. And of course, Peter, like you said, this is just for educational purposes. But if people are interested in talking to you about how this could maybe fit into their overall plan and want to just have that discussion with you first, why don't you give them your contact info as well?
Yeah, I would recommend listeners go to our website at raskinplanning.com. They can reach out, get our contact information there. But again, Michael, thank you so much for just a great time. It's always great to spend time with you, and I always learn something. So thanks.
My pleasure.
All right. Well, we'll wrap this up with our last thank you going to the listening audience. Thank you so much for tuning in and listening to the Wealth is in the Details podcast with Peter Raskin. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when Peter comes out with a new podcast, it'll show up directly on your listening device. And we humbly ask that you share this podcast, rate it, and leave a review, as this actually does help others find the show. Again, thank you so much for listening today. For everyone at Raskin Planning Group, this is Eric Johnson reminding you to live your best day every day. And we'll see you next time.
Thank you for listening to the Wealth is in the Details podcast. Click the subscribe button below to be notified when new episodes become available.
The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Lincoln Financial Advisors Corp. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Peter Raskin is a registered representative of Lincoln Financial Advisors. Securities offered through Lincoln Financial Advisors Corp., a broker-dealer, member SIPC. Investment advisory services offered through SageMark Consulting, a division of Lincoln Financial Advisors, a registered investment advisor. Insurance offered through Lincoln Affiliates and other fine companies. Raskin Planning Group is a marketing name for registered representatives of Lincoln Financial Advisors. Lincoln Financial Advisors Corporation and its representatives do not provide legal or tax advice. You may want to consult a legal or tax advisor regarding any legal or tax information as it relates to your personal circumstances.